Hey guys, Dave with Moneyology here. Hope everyone is having a great weekend. Today is January 30th, 2022, and this is the weekend market review, where we'll dive into a number of charts from a weekly perspective, from time to time, from different time frames, to give us a better sense of where we've been, where we are, and where we might be headed. Let's dive in. Bottom line is there are a lot of opinions right now going on, and it's really hard to define where we are in the markets. It all depends on one's perspective. I think in the grand scheme of things, here's a weekly chart of the S&P futures. We're in a bullish uptrend, and yes, we broke down of one uptrend, but we're in a long-term secular uptrend, and we had a really good close to the week on Friday, bouncing off of this confluence of support around 4,200. Can it go lower? I know a lot of traders, Adam Mancini, someone who I respect and admire, expects us to potentially still test roughly around this 4160 area. So what he expects is potentially a follow through on Monday, a rejection, and then kind of a move back towards this 4160 area. I can't quite see it, but he's been on the ball, so we have to respect that. Bottom line is weekly MACDs are still in bearish territory. RSI is below the 50, so we have to respect the bearish case. Now, it's important to look at this from a shorter term time frame. Here's the 4-hour chart. And when you look at this from a 4-hour chart, I'm seeing bottoming action right here. This to me looks like bottoming action, but at the same time, it looks like chop. So in other words, unless we break above the previous high of 44.45, then it's still, the bears technically are still in control. I like the volume candles over the last couple of days. I like that RSI momentum is building higher divergence on this lower high versus previous high. So we've got positive divergence, which is what you want to see. But on its own, it's not sufficient. I also like the fact that we can draw it something like this, but I prefer to draw it on previous points in terms of resistance. And when you do it like that, you see a potential breakout in the downtrend or from the downtrend. So again, one day doesn't make a trend at all. So we'll have to see what the next couple weeks bring. But there are some positive signs. Here's the daily. Again, there's a lot of resistance now. We've got resistance here at the top, and so there's just a lot of reasons why this can get rejected around this 44.50 level. The previous bottom back in September, October time looked actually quite similar to this. But what this also shows is that we can have one of these attempts at a rally, a breakdown. So this could be this 4160 area that Mancini talks about, another breakdown, and then kind of that double or inverse head and shoulders, and then start of a new uptrend. Time will tell. Is this a V-shaped bottom? Is this a one that's going to potentially go lower and then higher and then lower again, zigzags? And then, so nobody knows. There are a lot of folks talking their book and expecting lower prices. Some folks like me who are long the market are talking higher prices, and you have to understand your biases. Here's the VIX. The VIX, when I see a shooting star like this, that's quite bullish for equities in my book. We closed below this downtrend here in this bullish flag, but still a downtrend. And that's a point that we need to consider. We also had a higher high on momentum here versus here. RSI did not confirm that momentum. So that's a good potential sign. Let's dive in real quick on the 4-hour chart. And what you'll see here is a potential descending triangle, something like this. And it looks to me like it wants to break lower right now. Now, is this potentially a bullish flag? Yeah, that could also play out, and perhaps we go all the way down to 24 before breaking higher. So, but I do think we broke the 50 RSI level, and unless there's a sharp gap down on Monday or overnight futures tonight, I think that we're going to see a move higher in equities over the next coming days. Here on the weekly chart is the S&P stocks above their 200-day moving average. And you see we've had a pretty precipitous decline all the way into 2021. And frankly, RSI began declining back in November, even as the S&P was still making new highs. However, we've had 1, 2, 3 lower lows in price. RSI has not made new lows. That's a good sign. That doesn't suggest that a bottom is in, but it suggests that a bottom is being formed, and that's important. So keep an eye on this one. Let's look at the Nasdaq Futures. The Nasdaq Futures, again, these are weekly charts. We broke the primary downtrend here to the downside. Let me just redraw that real quick, make a trend out of it. Something like this. So we broke that primary uptrend, but keep in mind when you look at this from a monthly perspective, we are in many uptrends, and so it's hard to just look at it from one time frame and say, well, the uptrend's broken and we're in a bear market. Not necessarily the case. And now we're in a downtrend, but this was a very bullish reversal candle, bullish hammer with strong volume, right? And so, in fact, this is the strongest volume on a weekly closing basis that I can recall since February of 2020. RSI is very oversold. In fact, it's as oversold as it's been at any point since March of 2020. And we've got no crisis on our hands. I mean, we could, but it doesn't appear to be the case right now. So what needs to happen is a recapture of this 14,800 level on the NASDAQ, because that was an important breakdown. So it needs to get recaptured and soon. Volatility on the NASDAQ, again, shooting star, couldn't hold that level. Let's see if next, and again, on negative divergence. So we've broken out of the bullish flag, but we might have weeks of downside consolidation if this shooting star is confirmed next week. Here's the stocks above their 200-day moving average. Gosh, I mean, this has been in such a downtrend, but it found support. And it found support with RSI not making new lows. Again, that's critical and as oversold as any time before March 2020. The stocks are trading at crisis levels, and people are just assuming that we're starting a new bear market. Unless we're going into recession, which I don't believe we are, I think that this reverses. Now, does it reverse straight up and we go into an uptrend? It remains to be seen. We can base here for a while as well. We can rally and break lower, double bottoming potentially, but a lot of different options. Here's the Russell 2000. Again, finding support here at previous support levels. It's not strong support. Much stronger support is 1650. We also broke down below the 2100, which is critical to recapture pretty soon. But look at the volume here on the Russell. This is capitulation type volume. And the last time we had such volume was back in March of February of 2020. Do I think we're getting into that period? No, I don't. And if that's the case, then I think we might have an opportunity for a rally. Something I'm just seeing right now, if you just connect this lower low and this previous high, right, in around September of 2021, you create this kind of intermediate trend here. And so we're finding support around this confluence. Can it go lower? Sure it can, but I wouldn't be surprised if this is where a bottom is carved out on the Russell. Here's the Russell value, IWN ETF, and we're kind of bouncing off support here. It's not the strongest support anymore. It's been tested many times. Can it fall through? Sure, and if it does, there's some support here around 138. But the much stronger support would come in at a substantially lower level around 128. So I don't think it's going to come down here. Eventually it may in a recession, but not yet. Russell 2000. Here's the most interesting thing. Whereas the Nasdaq and the S&P volatility have broken out, the Russell 2000 has not, and that's interesting. We've got substantially negative divergence and another shooting star. I think that this is potential recipe for a really strong rally. Look at the reversal here to the downside at rejection at that 69.1 Fibonacci level. For those of you new to our videos, there are several Fibonacci levels that are important. They're on RSI 69.1, 61.8 around these levels, 50, 38.2, 30.9. And if you subtract 1 minus 30.9, you get the 69.1. If you subtract 1 minus 38.2, you get the 61.8. So there's a lot of reflexivity here. And so these are important levels just as they are in price. And that's our approach to technical analysis. So bottom line is I'm seeing potential signs of a reversal taking place. Here's the Russell 2000 stocks above the 200-day moving average. Again, hit a new low, but RSI did not make new lows. That's important. The last time we had a higher low in price was back in August of 21. So now we made a new low, 2 new lows, but RSI has not done so. Again, as low as it's been since March of 2020, I think we're going to see a period of melt up over the next couple of months. And I don't know what triggers it, to be honest. Don't really care, but that's kind of, I'm just seeing a lot of potential kind of reflationary trades here if things play out like my charts suggest they might. So, okay, here's the emerging market ETF, still in a bullish flag, cup and handle downtrend, but continues to move lower and will continue to do so long as the dollar breaks out, and certainly did break out last week. Is it sustainable? We're going to see. We're going to take a look at that. But here's the area of very strong neckline support on emerging markets, and I think it's reaching that area. I mean, I would be a strong buyer. I am a strong buyer in my retirement account in emerging markets here. China ETF, it's been smacked down a little bit over the last couple weeks, but I do think that China represents a very important market in the world, and I think it's going to find support around these levels. I don't think it's going to break lower. If it does, there's a gap here around 33, which is a possibility that it fills if the markets really take another deeper nosedive. But something like this on the gap. But I would be a buyer of China, but I wouldn't be a buyer here. I would wait for it to break out because the risk to the downside is a move lower to fill this gap. So be careful with this ETF. KWEB, Chinese internet, still looks weak. It was showing relative strength, but right now it's not doing so, and I would stay away until it breaks back above this trend, and even then I would just tread cautiously and tranche in and wait until it breaks above 54. If it breaks above 54, I think it could really create an uptrend. New to the watch list is Brazil. Here's Brazil in a downtrend breaking out here. You got to keep an eye when this happens. When this happens, something's changing. It could be central to Brazil, but if this breaks above 31, this ETF is a very strong buy with targets much higher, potentially around the 38 level here on the Brazil ETF. Also new coming to our watch list is the Russia ETF. This has been in a nice downtrend, right, along with the markets. But look at the volume coming in over the last couple of days. Potential reversal if we can break higher above roughly 2350 and break above this downtrend. This would be a area that I would be watching as a potential entry point. And then finally, on the emerging market front, I guess the Korean index is not an emerging market, but overseas markets is the KOSPI, the Korean KOSPI. From my vantage point, you want to look at where it has the potential to bottom. So this is one area. The 2430 is the previous consolidation zone, and this is an index that's very important to the global markets. It bounced and rallied really nicely on Friday before the U.S. markets open, North American markets. So you want to see this rally and soon. Here I'll probably draw it something like this because this is the previous flag formation. So let's see if this is where it can find some support and potentially continue its rally to the upside. On the other hand, if it continues to break lower, then this is the support around 2400 here. So keep an eye on this one. All right, some of the North American ETFs specific or sectors specific to the U.S. markets. Semiconductors. So this one bounced off of support, and it was one of the strongest markets or sectors of the market for a while, and broke down from its bullish flag, potentially a fake breakout. RSI is not strong right now on the weekly, but again, as oversold as it's been since basically March of 2020. Can it go lower? Sure, but would it make sense for it to bounce and rally here for a couple of weeks? Absolutely can. Let's look at the 4-hour chart. Again, MACDs are positively diverging. RSI is not making a new low. These are all very, very positive signs of a potential rally. In fact, we can, for the purposes of brevity, we're just going to stick to the weekly charts here. Google had a nice rally, and earnings, I believe, are coming in this week, so that could be a potential mover and shaker in the general markets. But if Google breaks above 27.30, this would be a very strong breakout to the upside on Google, and I don't think the markets would fall if Google breaks out. The obvious opposite is also true. If it cannot hold these levels, then potentially that's a trigger to take the markets lower. So this is the uptrend that it's technically still in, and let's see. Of course, this is not a perfect art or science, so you can draw this various different ways, but this is kind of how I'm seeing it right now. Again, we look at this on the 4-hour chart, very strong positive divergences here. And so I don't think the markets are going to roll over under these circumstances. Facebook is looking on the 4-hour chart really nice. MACDs are curling higher, and RSI has broken the downtrend here with positive divergence. So again, Facebook looks interesting. We'll see Amazon here. Amazon is the weakest by far, but even Amazon broke out above on the 4-hour chart above the zero line on the MACDs. So this is a sign that large mega caps tech stocks are looking to break out. And real quick here, Apple. This was quite a reversal, but did it surprise me? No. Look at the positive divergence. We had 3 lower lows, but RSI did not confirm, making higher highs, and then eventually, boom, broke out. So bottom line is that when the mega caps rally, and this is what I'm seeing, we're back in the up range here. Let's quickly look at Amazon. Amazon again looks weak, and I would not. If you want to trade the stocks that are strongest, Amazon is certainly not on the list. But as a bottoming play, this is potentially very interesting. RSI is more oversold today than at any point in the last 3 years. That's incredible. Facebook, perhaps one of the strongest charts, back at support, and I think it's going to rally here quite soon. So again, earnings coming up. Berkshire Hathaway broke out, back testing this range. So long as this is not a fake breakout, this is a very good sign if this finds support around these levels. Okay, let's move a little quicker here. Financials kind of finding support here along this uptrend line. So let's see if that continues and we get a follow through, or is this just a back test of the breakdown? Here's a 4-hour chart. Again, strong positive divergence, and I think the financials are going to start moving higher based on the daily, on the week, on the 4-hour chart. So on the weekly, there's still a lot of kind of bearish sentiment. We're below the 50, and so long as we're below the 50, the bears are in control. But on the 4-hour chart, I think the bulls have recaptured that control. Here's the transportation stocks. This area right here would have been very strong support. That's exactly where we closed. We hit this lower leg of a lower boundary line here of this bullish flag. So let's see if there can be a follow-through breakout to the upside. Home construction. Again, found some support here. Let's see if there is a follow-through to the upside. You're going to see the same thing. You're going to see a lot of positive divergences here. 3 attempts at a breakout. Will the 4th time be the one that it breaks out? Again, positive divergence, higher highs on RSI relative to lower price. Even the biotech sector is starting to look a little spiffy here, but this is terrible technicals. So I would stay away from biotech right now. Regional banks looking strong, potential fake breakdown here, but look at the volume. Gosh, that's a huge volume on the weekly, and I just can't see how how folks are so bearish on the market when financials are in an uptrend. This tells me that the economy is still chugging along and likely moves higher. Microcaps also found support here along the trend line, And so I think the microcaps might have a nice strong bid. This is kind of the support region, not strong support, but this is where I would expect us to find that support along this previous confluence of support. But it needs to recapture 131 on the IWC. Marijuana, I see a lot of deep value folks in marijuana right now. It needs to break above 618 here, and from a technical standpoint. But this is value area. I think these stocks are very, very cheap. All right. Very interesting is the bulk shipping. Bulk shipping has basically been in a correction, coincidentally, since September highs, which is effectively where every other smaller cap and mid cap stock, and frankly, most stocks have been going down since. And all of a sudden, we see a double bottom here and a not positive divergence, but potentially a reversal. So I look at the 4-hour chart, and we see a breakout here on the 4-hour chart. You look at this on a daily chart, and again, the dailies are curling, RSI is breaking out, and potentially we got a reversal here. And what is this telling us? Perhaps a risk on trade is back on. Don't know, but why that's happening, but certainly it's an interesting thing. And this is the area of support that I would have expected us to rally from. Is it going to be enough to start a new uptrend? We'll have to see. All right, let's look at the bonds. Treasuries on the weekly in a bullish uptrend, potentially still consolidating. I could see consolidating all the way down to 155, but I would love to see a healthy basing pattern here for a little while before an eventual move higher. That likely takes this index all the way to 240, 250. But I don't think it's necessarily happening now. Look at the 4-hour chart, and you've got a potential head and shoulders reversal lower. So wouldn't be surprised, again, if we backtest this 150 area to the downside for a while. High yield bonds, 4-hour chart, potential reversal, positive divergence on this lower low. RSI didn't confirm. It's a good sign. But here on the weekly chart, again, it needs to recapture these levels. The first range has been broken to the downside. Here's the secondary range. It needs to hold these levels to maintain quality credit conditions. Volatility on bonds, not going crazy. And it looks to me like, although MACDs are breaking out, they're not breaking out with any oomph to them. So to me, that suggests that potentially, again, we're creating a potential reversal here and going lower on the volatility. Here are the long-term 20 and 30 year duration bonds. So if this goes up, that means if this breaks out, that means bonds are breaking down, or rather, bond yields are breaking down. So it's range bound, and we'll see which direction it decides to go. If this goes lower, rates are breaking out. If this goes higher, long-term rates are breaking down. So, all right, the internet fund, really, that should be around here. But the internet fund index, obviously not doing well. But again, if you're going to find some support, this is precisely the area right now that we'd be looking for support. It was the previous kind of basing pattern here. So this would be a buy zone. Hasn't reversed yet, but if it does reverse, this would be an area that I would be looking at to be a buyer if I was interested. We're interested in this space. All right, let's go into the interesting stuff. I know many of you guys are here for this. So US dollar, is it a breakout? We'll find out very, very soon. When you look at this on from a weekly perspective, first of all, there's a huge amount of resistance around these levels right here, right? This was the previous basing pattern. Secondly, the MACDs has slightly broken out, but look at RSI, bearish divergence, negative divergence. So let's look at this on the 4-hour chart. RSI was hugely overbought, but on the secondary high here, it couldn't break above the 69.1 level. I think this is going to be a fake breakout and reverses lower. I can tell you the Federal Reserve, and I know folks there, They do not want the dollar to break out no matter what. And so I don't know how they're going to do it, but I have a strong suspicion that the dollar breaks down here. And if that's the case, then commodities will benefit and the general markets will as well. All right, Uranium Trust. This was a very bullish weekly candle on the Uranium Trust. Looking in closely, potential breakout. We've had these before, so it needs to break out next week. The MACDs have confirmed a breakout on the 4-hour chart. That's the difference between this breakout and this one. Is that MACDs were breaking lower on this one already, whereas now they're just now breaking higher. So I would love to see a flush higher towards 16 to confirm and finally get that upswing in price. But until it happens, we're still technically in a downtrend. Bullish flag, but still in the downtrend. Uranium equities have been very, very weak, but RSI is at its lowest level since basically the March 2020 lows. So is this potentially a reversal at the lower end of this boundary? Perhaps. And if it reverses higher, it's got a lot of work to do. It needs to break above the 23 level to begin an uptrend. So we love the fundamentals, we're buying, but I can understand why someone looking at this chart might say, you know what, there's no reason to go long right at these levels, unless again you're a contrarian. Here's kind of a trend within a trend, and it's kind of found support at these levels. Let's see if it can build on this. Here's copper. Copper's kind of range bound, had a negative week last week, tried to break out on the MACDs and then reverse lower back below the 50 RSI level. Very curious to see how copper plays next week. And while we're at it, let's take a look at the copper miners, add that to our index here. Copper miners. Yeah, I mean, copper miners look pretty good, but still very much range bound along these levels here. So we'll see how copper miners do over the next couple of days. Above this line, bullish; below this line, bearish; and in between, kind of stuck, range bound. And here's just kind of range within a range. So let's see if this range gives it some support. All right, gold. Gold is it is a enigma. I mean, 2 attempts at a breakout, lower lows. I said this last week that I wouldn't go long yet from a technical standpoint because it wasn't creating that higher high thrust on the MACDs. RSI created lower low, and potentially we get a breakdown on gold again. So next week is critical for gold to find some support here. If it doesn't find it, then I would expect to see lower prices on gold. What does that mean for equities? What does it mean for commodities? I don't know. Gold miners at a critical juncture right now. This is kind of the support zone, and if it cannot hold these levels, then I expect it to break lower. So that's kind of what I'm seeing on the gold in the gold space. On the shorter term time frames, it's breaking down right now. I did find some support, but I'm not seeing any positive divergences necessarily. So gold, I would be careful right now. I don't know. Oh, here we go. Here are the majors. We're looking at the juniors. The majors, same sort of story. Coming into some nice support zone here. So this would be a buy territory longer term, but with the MACDs breaking below zero right now, unless they get a sharp reversal, I would be very cautious right now of gold miners. Silver miners, here's the silver futures. Again, is this a consolidation or a that's going to reverse higher, or is this something that's going to reverse lower? If it reverses lower, next support really is between $16 and $19. So silver bulls want to see that these levels holding. Silver majors breaking down right now, and if they can't recover this area, then the next support zone comes in along 2780 to 33. So this would be kind of the buy zone. Is this just a fake breakdown or a continuation lower? Silver juniors, same sort of story, but even weaker. So I'm under invested in the gold and silver, and I want to get more exposure. So I've got mixed feelings. To see this go lower means potentially the dollar is higher, means commodities are weaker. Not necessarily, though. We've seen periods of time where gold and copper disconnect and go different directions. This would be the buy zone right here. Let's see if these levels hold. Platinum still confounds me. Seems like it wants to break out. More bullish than gold and more bullish than silver right now. But is this a reversal right now? For precious metals to move higher, platinum needs to lead the way. And so far it's doing that. Palladium is breaking out. So this is the type of move you want to see in a bullish uptrend. And we're certainly seeing it. Palladium, the one area you want to frankly be long right now. Crude oil is in a bull trend, but again, negative divergence on the RSI is a little bit concerning. And if there's a reversal lower, this would be the area that I would expect it. So we were trimming our XLE and PSCE holdings in our retirement account. And this is interesting. This was a huge volume day on the XLE, so it can absolutely go higher, but the risk is increasing, and I think this is in a long-term uptrend, and I think continues moving higher. But if there's a reversal, I think there's going to be a rotation out of this trade potentially back into tech. But we'll see. RSI, you see that it's just still a little bit weak here. It's not as high as it was back here on the previous high. So some negative divergences on the energy stocks right now. Here are the small caps, and they're struggling. This is a good buy and entry point potentially, but if this area breaks $7, then I could see it break lower. So I mean, small caps should be here given where oil is, but they're not. So better place to trade is the large cap energy plays. Silver, or rather steel, nice bounce off the lows here on Friday, and then to close the week. But steel stocks still in negative MACD territory on the 4-hour chart, building some nice positive divergence. So I would love to see a reversal and a continuation pattern versus a breakdown. So we'll be watching. Finally, crypto right now is a little bit weak today in weekend trading, but this could be a good bottoming entry point, especially if the markets turn higher for crypto. Between 32,000 and 38,000 is a buy zone. If it breaks that level, then we're going to continue lower. But again, we're as low on RSI as we were since March 2020. So I think a reversal is increasingly likely here. And then Ethereum, also kind of outside of the range, but barely so, in the buy zone right now. And again, RSI is very, very oversold. With that said, if it continues to be oversold, I would expect to see lower prices. So right now, again, I guess the main takeaway here is I am short-term net bullish on the markets. I think we given the large cap tech, I think you're going to see a positive reversal in commodities, but I'm not including gold and silver in that. And I think there's going to be a rotation within the commodity space from oil, for example, towards sectors like uranium and copper again. So we'll see what happens. But next week will be very, very critical to set the direction and set the tone for February. Again, tomorrow, month end. So I'm very curious how tomorrow plays out in the markets. And hopefully, from my vantage point, since I'm a bull, I want tomorrow to be a positive open and a sustained positive day in the markets. We'll see what happens. Take care, guys. Have a great rest of the day.